What is going on, you guys? My name is Alex, and I'm going to go over two trades that I took this week. So one of them is already a closed trade, which is an ICU trade right here that we took earlier on Monday, and then we ended up exiting right away the next day. And I'm going to be honest with you guys, I ended up making the same mistake that I made on TNGX. Now, at the time of TNGX, I questioned it. As you can see here, I have a question mark. I thought it was a glitch, but it ended up being a technical mistake that I made on my part. So what ended up happening is I put an additional number, so essentially a typo on my stop loss, and it put the price above the current price. So the stop loss was essentially set at a price that is higher than the current trading price, if that makes any sense. But at the moment, I didn't even know what happened because, well, I did conclude that it was a typo. I concluded that, but what I didn't conclude was why exactly did it take me out if the stop loss was set like pretty much 20 bucks above the actual trading price at the time. That was the question. That was a big question on my part. But today, or actually on Tuesday, it got answered very quickly with the ICU mistake here. So what essentially is happening here is, let's take a look over here at the ICU actual, the type of order that I had for ICU over here. So if we look over here at the top, you'll see that we did end up, you'll see the exit of the ICU trade right here, which ended up thankfully being a profitable trade as opposed to the TNGX, which ended up being a mistake that costed me. But we'll go a little bit higher over here. You'll see that I have my stop loss set at the so at 8.18, which is well above. I mean, it's even higher than my target. So my target was 6.33, and my stop loss was 8.18. So what the system does is, as soon as the system sees that the price is trading above your stop loss, it automatically thinks that maybe the news came out or whatever came out, but it needs to take you out automatically and as quick as possible. So it exits out essentially at any price as soon as it can, just because it thinks it kind of panics in a way. It thinks that the price has left far beyond your stop loss, and it just wants to take you out at any price as quickly as possible. That's just how systems work. I think all of the brokers work that way, but correct me if I'm wrong. But at least this happened twice, and only now did I realize what's actually going on is, so essentially if the stop loss is set at a price higher than the current price, it'll just take you out automatically at wherever the price is at the time. So if you'll notice some comparisons here of the TNGX trade and the ICU here, you'll see that the ICU trade was executed at 6:31, so this is automatic already. At this point, I already have my stop loss the prior day, and as soon as the market opens, the first minute, it just takes us out automatically, and this is exactly what happened on the TNGX trade as well. But unfortunately, this one was a loss, and even more unfortunately, both of these trades are actually performing really, really good today. This TNGX trade would have stopped us out. If we followed all our rules, it would have stopped us out at this point right here, which would have been probably like around, I mean, 16 to 18. That's a $2 move right there. And I don't know how much shares we had, but I think we had we had 23 shares. So that's not a lot, but it would have been like $50 profit at that point. And as a matter of fact, if we use some other form of stop loss or whatever, which we don't, it would have still been a winner. So we would have still been holding this one had we been using some other form of strategy. But if we stuck to our rules, we would have just profited a 1% return, which would have been good compared to taking a loss, which is essentially what we took out of this beautiful setup here. And I mean, this was a beautiful setup. If we look back here, nice resistance, nice breakout, nice volume over here, which are the three things that we look for when I scan for these stocks. But let's look at the ICU trade as well, just to let you guys know that I am trading these pretty good setups as well. So I obviously I make a lot of mistakes, and I'll explain what I mean by making those mistakes pretty quickly and easily for you guys. But the ICU trade, it actually went up 20% today. So I was looking at the top gainers, which is what I usually do every single day, and they just happened to show up right there, right on my face. And I was like, wait, didn't I take that trade a couple of days ago? And we ended up seeing a 21% move on this stock today. So, and realistically, we wouldn't have gotten stopped out. As you can see here, we have our stop loss at this point right here, which is the midpoint of the entry candle, which was this one. And the price never even touched that. Now, to be quite honest with you guys, we would have probably moved our stop loss to like right here in this candle. I don't know exactly, but it would have been 116 under this candle. Maybe it would have took us out. I don't know, but that's besides the point. The stock is moving perfectly right now. Maybe those of you guys that are in the Discord and that are following these trades, maybe you could have profited out of this move right here. I don't know. I'm going to try to avoid making mistakes from now on. And that's why I'm going to get rid of this spreadsheet pretty much and start fresh. But before we get into that, let's do a little quick recap on what's been going on for the past 2 months. So this spreadsheet is since February 4th. It is now April 3rd. It's actually, April 2nd. So I already have the new trade set up on the other new spreadsheet that I'm going to show you guys in just a second. But if you look over here on the left hand side, which is something that I barely implemented, is a little check mark or an X column here. And essentially what this is saying or doing is showing you guys the trades that were actually showing my setup. So the setup was actually there on all these check marks that you see, and all the ones that have the X's, there was no setup whatsoever, and I really shouldn't have taking those trades. And I try to do this as objectively as possible, really not really considering whether the trade was a winner or not. As you can see here, even in this string of losing trades, I do have 3 little check marks, green check marks, meaning that those were actually valid setups here, and 4 of them were not valid setups. So I do have a lot of I do have 3 losers here that were actually check marks here. So I try to be as objective as possible, only checking the actual trades that were, well, actually following my rules and actually meeting my criteria. And what I ended up happening after eliminating all those X's, so pretty much deleting those and only calculating the P&L from the ones that do have the check marks, I ended up making around 8 to 9%. And 8 to 9% in 2 months, that's pretty good right there. So I'm going to try to do that with this new spreadsheet here, with my new trading that I'm going to be doing from now on. I'm going to try to get as clean as possible setups. Take the cleanest possible setups is what I meant to say. So that way by 10, 20 trades from now, I'll have pretty much essentially all check marks here, or try to avoid getting the X's like in the previous spreadsheet that we had. So I'm going to get rid of that spreadsheet. The old spreadsheet obviously is going to be my books, but it was already getting a little too cluttered anyway. And I'm going to start fresh with the new one here. And what better way to start it off with a brand new, beautiful setup that we took today. If you're not familiar with my Discord, I do send out a watch list here every single day. There are some days where I don't have. We literally experienced 2 days right here. So not every day you'll see a good setup, but today we had 2 decent setups. One of them was SIDU. But SIDU didn't end up closing above the resistance level, which is something that I look for. But the Kodak trade, which I'm going to break it down right now, was a beautiful setup. And I do send this out 1 hour before the market closes. So if you're not familiar with my trading system or my strategy, I essentially enter 1 minute before the market closes. So this gives you guys roughly a 1 hour head start. And besides that, I do have a brief description here of my strategy. With that being said, I will mention that this is a foundation, so just a basic strategy to get you guys started. Just simply looking back at my old spreadsheet, you'll see that we only profited like 2% out of those, considering all my mistakes that were made. 2% essentially breaking even. So just use this as a foundation to get started. And as you can see, we do have 2 versions. So this is the updated version, the more modern version, a little bit of tweaks using my data to make corrections, make little tweaks, adjustments to my strategy, and really just sharpening my edge. So use this as a foundation. Go ahead and join the Discord. I do have a watch list like I mentioned. And at the end of the day, I do send out the trades that I actually did take, which was Kodak in my case. You'll see here my actual entry. So about 47 shares at 12.59. And I do include my stop loss, which is at 10.16. My target, 19.67. But let's look at the technicals here and explain to you guys exactly what I'm looking for when I look for these stocks. So the very number one thing is an aggressive green bar, an engulfing bar, an elephant candle, whatever you want to call it. I want to see a massive green candle. Now, there are a couple of caveats, like for example, the wicks on these candles cannot be too huge. Like for example, this little wick right here, it wasn't that big. Maybe if it would have closed under the $11 mark, which is the minimum that I would have paid. If we look at our Discord here, you'll see that I had mentioned that I'm willing to buy this above $11. So if it would have closed under $11, I just wouldn't have liked it. The wick would have been too much, and it just wouldn't even be considered an elephant candle at that point. The bottom wick as well, relatively small here, so it was a good little aggressive green candle. And relative to the previous candles over here on the left, you'll see that this candle pretty much eats up any of these candles here. Maybe this one, probably like twice the size of this one over here. But all these candles in the past are insanely small compared to this current green candle right here that we got today. And this is a daily time frame here, so I am swing trading these stocks. Hence why I make these videos, because otherwise if I was trading the 5-minute time frame, I'd just be speaking in hindsight right now. But maybe you have an opportunity to trade these, or at very least you'll see these play out tomorrow or the next following days, and you'll see, well, how my trades are playing out. So like I mentioned, number one is an aggressive green candle like this, closes relatively high to the high point, minimum wicks. And number two, what I'm looking for right here is some form of resistance being broken with that aggressive green candle. So if we look over here in the past, you'll see a high data resistance. And what I mean by high data is essentially a trend that has been going on with a lot of days here. We've been seeing this little resistance over here, little range, since when is this? November 7th. So we have like 3 or 4 months here of just consistently going in this range, and then we get an aggressive break with today's explosive green candle. So the resistance being 1 point here, and then a second point right here. Just a 2-point resistance level is good enough for me. And that's number two right there. So number one, an aggressive green candle. Number two, resistance that is being broken with that candle. And there's one more thing that tops all of this off, and that is volume. So if you look down here, you'll see an explosive green candle over here as well, signifying that money is flowing into this stock as we speak, and essentially giving us the confirmation to top all these things off. So number one, an aggressive green candle. Number two, some resistance that is being broken with that green candle. And then number three, to top it all off, aggressive or explosive volume over here in the bottom. So we have all those three things giving, and I rated this thing a 10 out of 10, by the way, just simply because, well, it's a beautiful setup here. And just to give you guys another example here of beautiful setups like this, let's go over a couple of them that I have right here. So there's an example of one of these other plays, an aggressive green candle right here, broken out of some form of resistance, explosive volume over here. Let's take a look at another one for you guys real quick. Beautiful resistance over here being broken with an aggressive green candle, and all of these have typically some form of continuation. As you can see here, another little resistance. This was just one point right here, but still a nice little resistance being broken with an aggressive green candle. And I have several of them here. Atom here, an aggressive green candle right here, broke some form of resistance over here in the past, explosive volume. Essentially, that's all I'm looking for right there. So I'm just keeping things simple here. The whole point is just to build discipline, and more importantly, just get a feel of what these stocks are actually doing under all these conditions that I just named right now, and how they react. And then after a while, you'll start to develop intuition, which is something very valuable and you could use to actually maximize your profits. So a good way to put it is, mechanical trading will make you profitable, a good profitable trader, but implementing intuition, discretion, whatever you want to call it, makes you a great trader. That's what makes a good trader a great trader right there, once you implement intuition into your trading system. But you can only get intuition or discretion whenever you have years of trading the exact same setup, or at least similar setups, looking at these stocks, and that's pretty much it. So I'm going to end it right there, leaving you guys with a quick breakdown of my strategy, quick update of my spreadsheet here. I'm going to start fresh, and then also throwing in some wisdom there for you guys. So that's my spreadsheet right now. Kodak, brand new trade, gave it a 10 out of 10. Gathered some data here, looking at the moving averages. I didn't have them up here, but all of them are sloping to the upside here. As you can see, they're starting to slope up right here. So that's typically what you want to be seeing when considering the moving averages. I don't consider them too much, but they definitely do give me a feel of the trend of this stock. And this stock is kind of in an uptrend. Ideally, you would just trade these stocks. You wouldn't want to be trading stocks that are in a heavy downtrend. Yeah, that's gave it a 10 out of 10. Exceeded volume, uptrend, 2 touch points, 95% close from the high, so close to nothing in terms of the wick right here. And I'm going to end it right there. Again, I have my Discord here. If you guys are interested, go ahead and check it out. Feel free to send me a message, direct message me, whatever you want to call it, with any questions about the strategy, about trading in general. I'll gladly answer them. Be sure to leave a like if you like these quick updates, quick little breakdowns on my strategy. If you have any questions and don't want to join the Discord, just leave them down in the comments of this video, and I'll gladly answer them. So things are getting a little bit loud in my house right now. I'm gonna end it right there. I'll see you guys tomorrow. I think tomorrow is gonna be an early close. I'm not entirely sure, but if I take no trades, then I'll see you guys in the next week. Have a good weekend, happy Easter, and I'll see you guys next week. Stay focused.